And welcome. This is charting the second half of 2020 with Mary Ellen McGonagle, founder, president of MEM Investment Research. Bit of background as to where I give a bit of a platform as to my approach to the markets, as well as what we will be reviewing today. I do have quite a bit of experience both on and with Wall Street. But my formative years as it relates to the stock market were during my period with William O'Neill and Company. For 15 years, I was the vice president in their institutional division, where I worked with top portfolio managers and analysts around the world, advising them on the markets and stock selection. And Bill O'Neill is the founder of Investors Business Daily. That is the publication devoted entirely to putting investors in front of these high growth, fast moving outperformers before they take off. So that is the basis for my work, and I think that will become evident as we discuss not only where we are currently, but what my work is anticipating going into the rest of this year. So let's take a look. What is down the road for this second half of 2020? Well, certainly we have a presidential election that is coming up in November, always with an air of uncertainty. So that is one of the more major items occurring in the latter half of this year. And then also we're currently in a recessionary economy, a period of economic contraction. So what I'm going to be doing today is examining the most recent prior periods, both when the most recent election in 2016, as well as when our most recent recession occurred, take a look at those stocks that were able to withstand the broader market pressures and volatility, and then compare that to where we are today. So let's get started. Take a look at the most recent recessionary period, and that was in the bear market of 2007 into 2009, and a good part of that was during 2008 when the economy did go into, in fact, they call it the Great Recession. And for those of you not familiar, during 2008, the S&P 500 was down 38.5%. So let's take a look. There were actual companies that not only put in a plus side, they actually had performance to the upside. They also here, I'm listing the top 10 performers during that 2018 recession. And in my work and what I'm doing here is I'm looking for themes. Are there themes as far as stocks that are able to not only withstand the downward pressures, but actually put in an increase in their stock price? So some of these are pretty significant. First theme, of course, is we can see discount stores. We have Dollar Tree, Walmart, Ross, and those three certainly would stand out. But for my work, I want to look beyond that and look for areas that are in particular providing stocks that have been innovative. The reason for their growth is due to innovation. Those are going to be, by and large, your faster growing stocks. And in fact, we do see a theme here. And that is biotechnology. We have a biotech stock, Vertex. Amgen would certainly fit into that. And then also Edwards Life Science. This is also at this time medical devices, but a very significant innovator during that 2008 period. So let's take a look. This is IBB, one of the ETFs for biotechnology. And this, during what I'm pointing out to you here, is the performance of that ETF, IBB, during that 08 39% decline in the markets. We can see that these biotech stocks held in remarkably well. And let's take a look at some of the standouts within biotech. We can see Biogen, Amgen, Celgene, all leading stocks, certainly heavyweight names within biotechs, and each one of them were producing very highly innovative medical therapies, treatments, and products despite the Great Recession. So Biogen with their treatment, a new one for leukemia. Amgen did tons of work with rheumatoid arthritis, and then Celgene, very active in blood treatment disorders, but their primary contribution was a blood cancer treatment. Each of these stocks did withstand the broader market pressures because despite a weak economy, their products were in high demand. They're still going to be need to purchase that drug for leukemia, arthritis, and blood cancer. Another area within that 0809, this particular stock is Netflix, and we're all quite familiar with the company now, but during that 07-08 period, the company was also in a highly innovative phase. This is that bear market. You can see that it did advance, certainly outperform the broader markets. They did in 07 launch a streaming video, and then in 08 they shifted their their video to cloud computing, and it was certainly they were in the forefront of companies that were doing that. But the concept here is the fact that they were continuing to be innovative, which was in turn driving demand for their products, and that in turn helped the company perform well. Another stock during that 07-08 bear market, Intuit. This company was at the forefront of social media usage. In fact, they were winning a number of awards, and in addition to providing a product that was essential, their QuickBooks is well known in accounting circles. Again, they were really proactive and innovative as far as the ways that they were helping their customers and users stay connected. And we can see also here that the company, this is another stock that did fare better than certainly the broader markets. Another example is CRM or Salesforce. This is another award-winning company renowned for their continued innovation as far as providing a software platform for marketing teams in 08 in particular, and this is in addition to numerous innovations both before and after this time. They launched what's called Force.com, and it was an app that allowed customers to build and install apps onto their own Salesforce.com interface. And now it may sound commonplace now. At the time, it was very cutting edge, innovative, and we can see that while the company and the stock did deteriorate with that bear market, the stock also stabilized before the March 09 turnaround in the markets. Take a look at this, and coming out of a bear market, very, very constructive behavior if your particular stock firms up and improves prior to the broader markets. So CRM did go on to be a big winner out of that bear market in 08. Let's take a quick look. This is a little confusing look at, but it is a view of Apple products and their various innovations going back to 1976. I'm pointing this out because quite simply their most highly innovative period is 2008. Take a look at all these products that the company did go ahead and innovate and bring to market. We can take a quick look at Apple, again looking at they did unfortunately suffer during the bear market, but again another big winner and leader out of that 08 bear market. Let's go ahead and talk a little bit about how these innovative companies can thrive despite a recessionary period. And quite simply, their products that they are, in fact, bringing to market through their innovations are, among other things, enhancing productivity. They're allowing individuals to complete tasks in a faster manner and in a more efficient way. Also, in other areas, such as medical therapies, these cutting-edge new drugs and treatments are saving lives. And by so doing, of course, they are going to have a very natural underlying demand for their products by individuals who are unhealthy. So let's go ahead and look also at the concept of essential services. And in this case, I'm talking about Intuit. They did, in fact, have a software platform that was needed throughout the small business industry as well as accounting. So a product that was needed despite a declining economic backdrop. So let's take a look at another period. That was the 08-09 Great Recession. I'm also going to take us through a period prior to the November 2016 election. And we're going to take a look at some of the stocks that outpaced during that period as well. So in particular, what we are viewing here is quite simply a performance using these bar charts. And to be precise, this is from July 8th to November 7th back in 2016. And so really I want to see what areas did well in those summer months leading into that election. I actually remember that period quite well. And so we can see, no surprise certainly for me and from my work, but technology was a very clear outperformer, 7.3% during that July to November period. And then commercial services, it was not an industry group back then, but it is showing you the performance. This is all about Facebook and several of the other innovative internet companies that were present during that time. And then other areas did in fact falter. So now that's our backdrop going into that July to November period. Let's take a look at a chart of the S&P 500, and this is taking us again into that period. So this is the certainly we can take a look here. This is July. We can start with this July period, and July was a rather robust month for the S&P 500, not unsimilar to the current period now, but we did level off, and there was a lot going on going into elections, just far too much uncertainty. And then 1 month before the elections, we did see the market correct, and we had this really intense period here of high volatility, and again, all about uncertainty as to who would win, what the follow-up policies might be, and what impact that might have on the broader market. So that's a look at the S&P 500 in that late 2016 period. We'll go ahead and keep that in mind as we progress. Now I'm going to be reviewing with you those areas we talked about. Technology, while healthcare suffered from July to November, I was unable to show you in that particular bar chart, but biotech stocks outperformed into the election. So this is that period. It outperformed during the recession. Let's go ahead and shuttle over to this July to September period, actually November, and we can see relative to the S&P 500 chart that we just viewed that biotechs did in fact outperform also during that pre-election period. Let's move on and take a look, because technology was one of the leading 7.8% performers going into the election through the summer months. And one key stock within that is Microsoft, certainly a heavyweight stock. We can use that as a bellwether. This is that uptick I talked about in the broader markets in July. But let's take a look as we get closer to that 1 month period prior to the election. Microsoft held firm. The company at this time in this period here in 2016, they were just offering their cloud computing hub, which is well known now, but at this time it was just being offered to the public, and the company actually came out with that announcement, did very, very well, gapped up here despite a very broader market that was in downward, a lot of pressure there. So we can see the innovation of Microsoft was being rewarded because of the increased demand for their products. So from these various reviews of those prior market periods with the recession and going into the election, we got a nice view of those clear-cut areas that did not only stay pace with the markets, they outperformed, and by a very wide margin. So let's take a look at what we can potentially anticipate going into an election during a recessionary period. We have a double whammy, if you will, during these next few upcoming months. Well, we'll begin by taking a look at where we are currently, and this is a daily price chart of the S&P 500, taking a view at where we are currently, and we can see that we've had this really nice move out of this bear market, a very significant advance where we recouped almost back to our prior highs, and then a very natural pullback more recently here with the increased cases of COVID-19, a lot of in the way of volatility, but at the end of the day, the trend is up. We can see that this RSI, that's a momentum indicator, your relative strength indicator, is in an uptrend. I like to use stochastics when I'm looking at these broader market indexes, and we can see that they are not only trending upward, but positive up above this net neutral 50. So currently, the broader markets are poised. We're about 1% away from hitting a new high in price that would be even more constructive and bullish. So currently, as of now, the broader markets are bullish and in an uptrend. So let's go ahead and take that a bit further and look at where we can potentially seek leadership and areas that could withstand what very easily could be a period of bumpiness going into this summer months and the November elections. What we're looking at here is a daily price chart of the technology sector. This is a current price chart, and take a look. This area has been the true leadership area. If you think back, and I showed you the other periods, the recession, Great Recession, as well as going into the election, technology during that time was ever present and a clear outperformer. And I will argue that even now, tech stocks are the real backbone as far as keeping the economy going. So we can see this clear-cut uptrend. This is your shorter-term 10-day simple moving average, and the sector has done remarkably well. The RSI and the stochastics are positive. I'm going to drill down now into some of the stronger underlying areas within technology and make the case that this is an area from my work that is going to continue to outperform, not only because of historical precedent, but because of the current very unique period that we are in the world right now. So here is one of two of the strongest underlying areas within technology. This first one is semiconductor stocks. This is an ETF, SOXX, and it also has been an outperformer. Unlike many other areas, the semiconductor area's stocks have hit a new high in price, continuing to show positive attributes here on the RSI as well as the MACD. And semiconductors, for those of you not familiar, their chips are very essential in keeping the data centers, keeping the storing that data, also improving 5G networks so that data can be moved faster. They're really very, very essential in every area of the markets right now, of the economy, that are helping and assisting people to stay connected and also improve efficiency within those areas that are continuing to thrive currently. And then now from here, of course, you are going to want to have that ability to drill down into some of the underlying stocks within the leading area. So this is one of the leading semiconductor stocks that my work uncovered, certainly back here. And we were able to re-enter the stock as it turned bullish again during this early April phase. And this is NVIDIA, NVDA. And this particular company is iconic in the sense that they do provide chips to every single one of the high growth areas currently occurring, and that would be gaming stocks, streaming media companies, as well as those data centers and 5G networks. So they're really hitting a home run as far as the customer base that they are providing their semiconductor chips to, and the company has prognosed that they are going to continue to grow well into the end of this year, into next year. And we can see that the stock did turn bullish back here, and then more recently we had this secondary base breakout on volume, which is really another constructive secondary view of this stock's current uptrend that is anticipated to continue. I also wanted to talk about biotechnology stocks going into the latter part of this year. Again, we are using history as a guide as far as those areas that can withstand a recession and an election. But this year, there are even more reasons to embrace biotechnology stocks. And the first is that we are seeing much faster approval times for critical drugs. The FDA has stepped forward. This is even going into the current pandemic, but even more recently, they have set up teams and systems that are allowing these critical drugs that are in process to treat and help uh, with the vaccine for COVID-19. So that's one reason that these biotechs, I'm expecting them to continue to outperform. We're also in a period where we're seeing unprecedented advances with new product development. All of that has to do with cutting edge technologies. In fact, they were able to uncover the makeup of this new COVID-19 in a matter of days, as opposed to, if we go back to the most recent outbreak in '09, it took months. So this new technology is really forging this industry ahead as far as development of new treatments and drugs. Also, again, I talked about this, the major advances that are being made in possible COVID-19 vaccines and treatments. So let's take a look at a monthly current chart of the biotech ETF. Again, this is that IBB, but we're looking at a longer view here as compared to earlier. And there are two sound reasons for that. One is if we go back historically and take a look prior to this significant 5-year advance back here in biotechnology stocks, at that point in time, the ETF had broken out of a very long base on volume. And for those of you that may not be familiar, this 5-year period was just ripe. It was a period when genome sequencing was coming into play, and a lot in the way of innovation as far as powering the underlying stocks higher. Currently, now we are emerging out of a 5-year base, and history tells us that the longer your base, that's a period of consolidation, the longer your advance out of that base. And very similar to this period here, we're seeing tremendous innovations among biotechnology. In addition to gene sequencing genetically, we now can alter genes so that drugs can be responded to more effectively, and that's huge. That's only just a tip of the many innovations that are taking place, not only with cancer treatments, a lot of other areas as well. So let's take a look at an example of what I call a leading edge stock among or within biotechnology. And we're looking here at a weekly price chart. Ticker symbol is CRSP, and the company is known as CRISPR. And this is the premier stock that is involved in that gene editing that I spoke to you about. Very revolutionary. They partnered with another leading biotech firm, Vertex, and they were able to change the genetic makeup of individuals with sickle cell anemia so that they could then respond positively to their drugs. Very, very cutting edge. So we can see on this weekly chart that the stock has recently broken out of this nice 6-month base. Huge volume characteristics, very bullish. The RSI and the MACD are positive. And then also we can take a look outside of technology and biotechnology and look for other areas where innovation is really being met with high demand. And I think a prime example here would be Tesla. We're all very familiar with their innovation among electric vehicles. And we can see this is a weekly price chart, and the company has just really parabolically been driven to new highs. And the bigger point here is their innovation is their products are being met with high demand. They're posting very remarkable revenue numbers, and certainly an example how innovation is being rewarded with an eye toward a continuation of that behavior. And then here's another example. This is IGV, your software ETF, and cloud computing is very essential in keeping locked down students, also employees of companies, and then just individuals. This cloud computing usage has exploded. It's something that had been moving. Take a look. Going back, we can go back even further. I talked about '08. It's been in the marketplace, but companies and corporations have been forced to embrace this cloud computing. Growth prospects are tremendous, and this is an area that's expected to continue because it's software as a service. And so these companies pay a monthly or annual fee, and the growth prospects, they're not going to suddenly shut down their cloud computing. It's expected to advance through the end of this year and beyond. Semiconductor chips, we did talk about that area. This is a current chart, a weekly, and again, talking about those data centers. They also help in the area of robotics. So those are the two stronger areas. So I'm going to conclude here with my thoughts for the remainder of 2020. And first, this concept that I've shared with you is that innovative companies will perform well despite a recession or the inherent volatility that an election can bring. Also, what we are seeing currently in the way of innovation is happening, it's occurring at a very rapid pace. New technologies that are being developed are helping the world really cope with this historically unprecedented pandemic. And as such, the demand is going to continue again, not just during this lockdown phase and this lockdown period, but beyond into next year as well. And what we are seeing currently is, I spoke to you about the broader markets, but I also highlighted those areas that are currently outperforming, and the markets are rewarding these companies that are innovative and providing products and services that are helping to keep everyone connected and also improve productivity as well. So I do expect this trend with innovative companies outperforming to continue into the rest of 2020.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.